Welcome to the Tomorrow Money Show. I'm your host, Mnyaradzi Togarepi. Today, we are exploring a growing sector in crypto and decentralized finance. That's redefining how we forecast the future. I'm talking about prediction markets, ladies and gentlemen. Specifically, I will dive into decentralized prediction markets like Polymarket. I will talk about what they are, how they work, and why some argue they are a better source of information than traditional polls or even a smarter form of gambling. So, first, what are prediction markets? At their core, prediction markets are platforms where individuals can trade financial contracts based on the outcome of future events. Each contract reflects a binary event like will X happen and trades at a price between $0 and $1. That price is effectively the market's probability of that outcome. So if a contract trades at 60 cents, the market consensus is a 60% chance of it occurring. These platforms let participants buy and sell shares in event outcomes, and anyone who believes the current market price misrepresents the real probability can trade accordingly, earning money if they are right and losing it if they are not. In that way, price becomes a real-time gauge of collective belief. The idea is that people should put money where their mouth is. The core of prediction markets is event contracts. Event contracts are the asset you trade on prediction markets. For prediction markets like Polymarket, event contracts are essentially an agreement between two people who have different beliefs on the occurrence of an event and they want to place a bet on it. Whoever's belief gets to happen will receive $1 per contract. For example, I might say Liverpool is going to win the 2026 Premier League. That is an event. Now, there is definitely someone out there who thinks Liverpool will not win the league. So we create a contract, an event contract, where we put together money per contract that adds to $1. So if I think the probability for Liverpool is winning is 60%, I will put 60 cents per contract. And if that other person think the probability for Liverpool not winning the league is 40%, they will put 40 cents so that the total locked value in this contract adds up to $1. Whoever wins this bet walks away with the dollar. So if Liverpool wins, I will walk away with $1 after an initial investment of 60 cents, making a profit of 40 cents per contract. In decentralized markets, these contracts are managed by smart contracts on blockchains. That means the terms and settlements are governed by code, not by a central authority. All our money gets logged in a smart contract so that no one of us gets to run away with the money if they lose the bet, and the smart contract automatically sends the money to whoever has won the event. Decentralized prediction markets are the kind built on blockchain technology. Unlike traditional or centralized platforms, decentralized markets use smart contracts and oracles to automate trading and settlement based on real-world outcomes. They run on blockchains like Polygon, track trades transparently, and settle outcomes without intermediaries. The blockchain on its own does not know what's happening in the real world. So to bridge that gap between the smart contract and the real world event, there is use of what are called oracles. Oracles are specialized data feeds that bring real world event results on chain so that smart contracts know how to resolve contracts once events conclude. These technologies make decentralized markets transparent, censorship resistant, and globally accessible. The best known platform in this space today is Polymarket. Built on the Polygon network, it lets users trade contracts using stable coins like USDC. When you see a market on Polymarket, you can choose whether you think an event will happen, yes, or won't, no. Buy those outcome shares and watch the price move as others trade. If you are correct when the event resolves, each winning share pays out dollar, as I explained before. If you are not, your shares become worthless, just like a binary option. Because Polymarket is on chain, all trades are transparent and verifiable. And because it's open to anyone with a wallet and USDC, it's borderless with no local licensing and no intermediaries. Prediction markets have grown rapidly over the last couple of years. In 2025 alone, platforms like Polymarket and its competitor Kaushi reported record volumes in the tens of billions of dollars traded across thousands of events. Weekly trading volume even hit up to 2 billion at times, and cumulative yearly activity has topped more than $27 billion. Polymarket itself has seen monthly trading figures in the multiple billions and hundreds of thousands of active traders, reflecting mainstream interest beyond just retail crypto speculators. Institutional backing has also surged. The owner of the New York Stock Exchange, Intercontinental Exchange, committed up to $2 billion in investment into Polymarket, signaling significant confidence in prediction markets as both a forecasting mechanism and financial asset class. So why all this fuss? Prediction markets aren't just about gambling, even though they share similarities with betting. Because participants put real money on the line, markets rapidly incorporate new information and sentiment, arguably giving more accurate forecasts than traditional polls or expert analysis. They aggregate a wide range of views into a single market price, creating a dynamic probability signal. For example, prices on economic indicators or election outcomes often shift hours before traditional institutions acknowledge a change, making prediction markets valuable for traders, analysts, and decision makers who want real time insights. The most notable example is when Polymarket predicted the 2024 US presidential election when expert polls failed to do so. This means that prediction markets are better than experts. And it makes sense. The wisdom of the public is better than a few experts. Of course, they are not perfect. Critics point out challenges such as liquidity fragmentation, potential for large traders to sway prices, and information asymmetry between casual participants and major players with faster data access. There are also ongoing debates around regulation and legality. While some jurisdictions embrace these markets as financial instruments, others treat them like gambling, resulting in bans or legal uncertainty. To wrap up, prediction markets are like Polymarket represent a unique intersection of blockchain, finance, and forecasting. They are transforming how we think about turning beliefs into probabilities, providing powerful real-time signals that go beyond traditional methods. Whether you view them as a better way to gamble, a next generation information system, or a new market layer in DeFi, they are undeniably shaping the future of crypto finance. They are definitely something to watch.